Sometimes it feels like indicators just draw lines and colors without really helping you make decisions. This one is different. It's still based on a moving average, but it shows you trend, momentum, overextensions, and even builds support and resistance levels for you. In this video, I'll show you how to set it up, how the signals work, and then we'll walk through 2 buy and 2 sell examples step by step, so even a beginner can follow it. I'm on TradingView right now, on GBPUSD, 1 hour, but you can use any market and time frame you like. Open the Indicators tab, and search for MA Oscillator Map, then select the one by Big Beluga. Once you add it, you'll see 2 main things: a white trend ribbon on the price chart and an oscillator panel under the chart. The white ribbon is your trend filter. When it's sloping up and price is trading above it, we treat the market as bullish and focus on buys. When it's sloping down and price is trading below it, we treat the market as bearish and focus on sells. Simple. The oscillator at the bottom swings between -100 and +100. When price is close to the moving average, the line hangs around 0. When price stretches far above the EMA, it pushes higher towards +100 and the colors turn brighter blue. When price stretches far below, it drops towards -100 and the colors turn deep red. At the extremes, the indicator prints small diamond labels at those exhaustion points and also marks them on the chart. From those points, it draws horizontal levels that act like dynamic support and resistance. Bullish overextensions above price often turn into resistance lines, and bearish overextensions below price often turn into support lines later. You'll also see a small momentum gauge on the side, showing a percentage from 0 to 100 for bullish or bearish strength. So, at a glance, you know how strong the move really is. Let's quickly fix one important setting. Double-click the indicator to open settings. Under the MA section, change the type from SMA to EMA and set the length to 100. EMA 100 gives you a smoother, more reliable trend line on the 1 hour, so we're only reacting to serious moves and not every tiny spike. You can keep the colors and other visuals at their default. Now let's turn this into a simple strategy. The basic idea is, use the white trend ribbon for direction, use the horizontal levels from the diamonds as support and resistance, and use the momentum gauge to confirm whether the breakout has enough strength to reach your target. For a buy setup, we want a clean bullish continuation. First, the trend ribbon should be angled up with price trading above it and moving above the 100 EMA. Second, we need a clear resistance line drawn by the indicator from a previous bullish overextension. Third, price should break and close above that resistance line in one clean candle, without lots of earlier wicks tapping that level. I like to see at least 5 candles between the moment the level is drawn and the candle that finally breaks and closes above it. Finally, the momentum gauge should show very strong bullish strength, ideally close to 100%.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Let me give you the first buy example. Here we can see 100 EMA is sloping up, price is sitting above it, so we're in bullish mode. Earlier, the oscillator hit a strong positive extreme and printed a diamond, which created a resistance line above price. After that, price pulled back a bit and moved sideways. For several candles, that resistance line stayed untouched. Then we get a solid bullish candle that finally breaks and closes above that line. At that moment, the momentum gauge is reading near 100% bullish. All our conditions line up. Here we enter a buy at the close of that breakout candle. Stop loss goes under the most recent swing low or just under the white trend ribbon, whichever makes more sense on your chart. Take profit is set at 1.5 times our risk. As the trade plays out, price continues higher and hits the target cleanly. Let's go through one more buy example. Second buy example, same logic. Price is riding above the 100 EMA, and a new bullish overextension prints a diamond higher up, leaving another resistance level above. Price pulls away, then drifts back under that level without touching it. After at least 5 candles, we get another strong bullish candle that finally closes above that resistance. Momentum gauge again is extremely bullish, close to 100%. So we take the buy as that candle closes. Stop goes under the nearest swing low. Target is 1.5 R. Sometimes the move is a bit choppier, but the trend is still strong and eventually price grinds higher into our take profit. Now let's go through a sell trade example. For a sell setup, first of all we want a clean bearish continuation. First, the 100 EMA must be sloping down with price trading below it. Second, we need a support line drawn by the indicator from a previous bearish overextension. Third, price should break and close below that support line in one decisive candle, with no earlier wicks poking through it. Again, I want at least 5 candles between the moment the support line appears and the candle that finally breaks it. Finally, we check the momentum gauge and look for very strong bearish strength, close to 100%. Here's our first sell example. The price is clearly moving below the 100 EMA, so the market is bearish. A strong bearish overextension printed earlier, creating a blue support line under price. After that, price bounced above that level for a while and left it untouched. Several candles later, we finally get a large bearish candle that breaks and closes below that support. The momentum gauge now shows near 100% bearish strength. That's our entry. We open a sell position at the close of that breakdown candle. Stop loss goes above the nearest swing high or just above the white ribbon. Take profit is again 1.5 times the risk. Price continues dropping in line with the trend and hits the target. Second sell example, same pattern. The price is moving below the 100 EMA, confirming the bearish trend. Another bearish overextension forms lower, and the indicator drops a diamond and a new support line. Price pulls up, then drifts sideways above that line for a while. No candle closes below it. After at least 5 candles, we finally see a strong red candle that closes clearly under the support line. The momentum gauge shows very strong bearish pressure again. We enter a sell position at the close, place the stop just above the recent swing high, and set the take profit at 1.5 R. You'll notice in all 4 examples we are not trading randomly. We only trade with the trend. We only trade when the level formed by an overextension is respected and then cleanly broken, and we only trade when momentum is very strong in the direction of our trade. This automatically filters out a lot of weak breakouts and false moves that happen when the trend is tired or when momentum is low. Of course, nothing is perfect. There will still be losing trades, especially if the market suddenly ranges or news hits. That's normal. So always use proper risk management and don't risk more than a small percentage of your account per trade. This is not financial advice. It's an educational strategy you can test, tweak, and adapt to your own style. This is going to be it for this video. Please feel free to like the video and subscribe to my channel. Thanks for watching the video till the end. I'll see you guys in the next video.